Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate reports into something you can actually understand. Today we are diving into Halozyme's latest quarterly report. Trust me, even if you think biotech is boring, this one has a few twists you won't see coming. Think surprise, royalty payments, and a potential lawsuit. I'm not even kidding. This report gives us a peek into how Halozyme performed financially over the past 3 months. We will look at what's making them money, what's costing them, and what big risks they see on the horizon. Think of it as a financial health check, but for a company. Before we jump in, if you like decoding complex business stuff into simple, understandable terms, make sure you are subscribed. And if you're into deep dives, there is a Discord link in the description below to join a group of like-minded people. First, a quick snapshot of the company. As of April this year, they had about 123 million shares of common stock floating around. Keep that number in mind because that factors into their earnings per share, which we'll dissect in a bit. The end of March was $176 million, a big jump from the $15 million they had at the end of last year. That is a pretty huge jump. That is like more than 50% increase in one quarter, not bad at all. Also went up to $571 million, also a pretty sizable increase from $480 million. So remained unchanged at $416 million. It is a non-cash asset that you will not see affect the cash flow. Let's move on to income. Up significantly, $168 million and $20 billion last year. This is where it gets exciting. This is revenue they get when other companies use their technology to sell drugs. So more royalties mean that drugs that use Halozyme's delivery tech are doing extremely well. Also climbed to $78 million from $58 million. They are selling more of their own products too, like Hylenex and Exvos did, two products that utilize their special technologies. These revenues are coming from all sorts of different geographical places. Most of them were from the US, about the 130 to their income. These strong top line numbers led to $118 million. So for every share they had, each investor gets about $1 for this quarter. This is a big jump from $76 million the same time last year. Of course, it is not all income because cost still has to be subtracted. It includes all the costs to make their products from raw materials to manufacturing. The cost of sales jumped up $48 million the year before. This makes sense because if they are selling more of their own product, then their cost would increase too. Started almost perfectly flat at around $17 million. This amortization is just an accounting thing and doesn't represent cash coming in or out of the company. Where's the cash going? They ended the quarter with $176 million. This is how much the company has in cash and very easily accessible funds. Let's zoom out and look at a slightly longer picture. They began the quarter with $115 million. Where did they get all the extra money? Digging in a bit, we can see that. Then we see something interesting. 244, not much, but it shows the company is confident and willing to buy its stock back now. Let's look ahead. Amortization is not going away. We can see that the expense will be pretty stable for the next few years. They expect to amortize it consistently. There is a bit of a loss involving how they play the currency markets. It shows that maybe playing in currency is not their strength, but also shows they hedge well and the amounts are tiny. This is the game where the company is making bets in different currencies. What they lost is not a major amount though. Halozyme says they sometimes get into disputes or lawsuits, but they don't see anything right now that would seriously hurt their finances. However, that can change, so it is always a watched area. There have been a few changes in accounting standards lately, mostly around income taxes, but the full impact of them is not quite known yet because the standards are so new. Basically, Halozyme is keeping an eye on how these new rules could change their financial reports, but it is hard to tell at the moment. Lastly, we see that some company leaders have stock trading plans. Basically, these are plans that let company insiders sell their stock at certain times to avoid any appearance of illegal insider trading. It is good that they have such controls in place and normal. But here is the zinger, a potential patent infringement lawsuit against Merck. According to Halozyme, Merck might be using their technology without permission to develop a subcutaneous version of Keytruda. Halozyme wants money and a stop to Merck's infringement, so this has the potential to get nasty. Putting all this together, Halozyme is going in a very interesting direction. On the plus side, partnerships are going strong with approvals and label expansions showing the value of Enhanjer. Strong royalty revenue reflects solid demand for drugs using their technology, and that revenue stream is the thing that all investors want and value. Plus, having a good amount of cash gives them flexibility to invest in new opportunities or buy back stock. However, there are some watch outs. Reliance on key partnerships could pose a risk if those relationships change. Well, these guys are not a household name, their technologies enable others to do even better, and Halozyme has a right to protect what they own. The potential patent lawsuit against Merck introduces uncertainty and could consume resources, and it depends on so many legal factors that no one can predict. It will be good if that plays out well though, but that remains to be seen. Bottom line, Halozyme is a solid player in the biotech space, but also has several battles to overcome. Alright, that's our take on Halozyme's quarterly filing. What do you think about their growth strategy and the risks they face? Chime in down below. If this breakdown was helpful, please hit that like button and subscribe to stay updated. Oh, and don't forget to join our Discord server. Thanks for watching and see you in the next video.